Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so we're going to do another update. It's sort of like a mid-month update, Las Vegas real estate market. And the reason we're doing it is because we just got some new data, and it shows some changes that we predicted in the right direction.
Okay, so here we go. If you like charts, this is the place where you need to be.
Yep.
So here we go with the first chart.
Okay, first chart, market action index. It shows that it's a seller's advantage, still slight seller's advantage, 34. This is the number. This is a metric that we've been tracking. When it was at the hottest, it was between 80 and 90. It's almost always at 40. A normal market in Vegas is 40. We have a slightly weaker than normal market, but technically not a buyer's market. There's more data. I'm going to show you the granularness on this. It's pretty cool because what you're seeing is you're going to see little changes, and all little changes all add up in the same direction.
Right.
Okay.
Okay. So the 34 is consistent with where it was 2 weeks ago. So this is not a big change. But here's where the changes start to happen.
Okay. So the first thing we're going to do is we're going to jump over here to this real-time market profile. Now this shows us the exact numbers as of yesterday. Okay. Median list price was $43,995 January 20th. 483. They're 489. List prices have gone up by $6,000. Now, that doesn't seem like a lot, but remember, this is over 3 weeks. You can also see the trend on this. They were declining, and then they've been increasing. Does not happen in a crashing market, right? Or a bad market. This literally does not happen.
Right, which we didn't expect things to be bad because we're going into spring, and we've said this before, that in the spring, prices tend to go up because this is when we do most of our transactions. This is when there is the most buyer demand. So this is where we generally see the most appreciation or the most increase in price.
And if you look right below it, that median price of new listings, it's doing the same thing, right? Mm-hmm. It's the new, and remember, why are these leading indicators?
Well, because they're telling us where we're going, right? They're telling us that we were lower a couple weeks ago and we're going higher. So this is telling us the direction of the market.
Okay, the next one is the per square foot sale price. Mm-hmm. This is the every single house sold. What was the price per square foot? It does not tend to move a lot. Mm-hmm. When it moves up slowly, down slowly, or sideways slowly. But what's interesting is if you look at this, it was at 249 December 30th. It's still 249. So this is literally like the bottom. Mm-hmm. It's not going down anymore. And if you look, there's hints that it's going up because the previous one we did was at 250. Mm-hmm. So it went from 253 to 249 per square foot over about 2 months, and now it's stopped at 249. So we're going to expect to see this start to go up. But remember, it lags listings by about 45 days.
Right, because that's how long it takes between when offers get accepted until we close escrow.
Okay, here's the real staggering one. Inventory. October 28th, we had 5,400 homes in Vegas for sale. We have 3,539 today. That's a huge drop over the last few months. That's a massive drop. That's extremely low inventory.
Right. So that means that we have buyers chasing fewer homes. It also means that buyers are having to take a second look at maybe homes that they've already passed on and maybe looking at them and saying, well, maybe I can make this work.
The other thing, too, is median rent is not dropping. Mm-hmm. So you may be seeing articles about, rents are blah, 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 but they're not because we know vacancies are extremely low in Vegas. Mm-hmm. And yes, there are some homes that are staying on the market a little longer. The exact number was 23 days, right? That was the number. We pulled the whole MLS. It was 23 or 24 days, which is pretty average. But you can see the median rent has crept up a little. Mm-hmm. What's incredibly interesting is when we drill down into market action index. So the end of December, it was at 31.9, and now it's at 34. You can also see that the market action index is bottom. So it basically got stuck at 30, 31, 32 for all of September, October, November, December, and most of January. Like we said, those months would be the sort of best months as a buyer.
Right.
And here it's at 34. I expect this number will only go up until June.
Right. Yeah.
Why is that?
Because it's springtime. This is when homes get sold. Remember, we have most of our transactions in the spring, and then the rest of the year kind of just putters along. So we are going to see a probably reasonably strong seller's market this spring, and then it'll peter out once we get into the summer.
Okay, median list prices shows you the chart. You can see the drop peak to trough on list prices. What's interesting here is the flip. The 7-day average is 489.9, so call it 490, but the 90-day average is 46. So the median list price of the last 7 days is more than the last 90, which this is a leading indicator. And it's likely this will stay leading for at least 6 months. That's usually what happens. There's a 6-month cycle in real estate. Go up in the spring and down in the fall.
Right. Yeah, I mean, I think this is going to probably keep going until maybe May or June. I don't know that it's going to have a full 6 months this time around, but it's going to have a few months.
The other thing, too, that's interesting here, this next chart, inventory. You can see the 7-day average of inventory. That's the dashed line. That's the leading indicator. That's that thing we were showing you where it's dropped off a cliff. And this is dropped off a cliff. And it's a much steeper decline than 2020, 2021, and 2022 were. Now, it's a much steeper decline because inventory is higher. But still, properties are disappearing faster. And in a bad economic times or a market crash, properties don't disappear this fast.
Right.
Why is that?
Well, if we're dealing with a bad economy, then we've got people who are either not employed, underemployed, or they are facing unemployment. So that means that there are less buyers in the market. We're not suffering from not enough buyers in the market. What we're suffering from is not enough listings.
Right. And just so you're wondering, in Las Vegas, national unemployment is like 3.4%. It's less here. And then we also have the California effect where the Californians are still coming over buying properties, either moving here or just buying investment properties.
Right. And it's not just Californians, but we like to pick on them.
Okay, this is price per square foot broken down into the 4 market segments, the top quarter and the bottom 3 quarters. The top quarter, that blue line, you can see that the bottom 3 quarters of the market didn't have substantial price declines. You can see peak to trough, they declined a couple bucks a square foot. It was the top end of the market that took the haircut. So remember that when people quote these numbers, properties are off 8% or 12% in Vegas, that's mostly the high end that took the biggest loss in value. But what's interesting is it's going up again. You can see it there at the end. It's starting to tip up again. And I went and drilled down on this. It's $3 a foot. It went from 304 to 307 in 3 weeks. The median price per square foot. This is sold price per square foot. Went from 307 to 304 to 307 in the last 2 or 3 weeks.
Right. Yeah. So there is a comeback. Hopefully coming for the luxury market. We know that they've definitely been beaten up a little bit, and I know a lot of people don't feel sorry for them, but I feel sorry for anybody in the market. So it's nice to see that buyers are coming back and that sellers are starting to have their fortunes improve.
The other thing that's very interesting here is you can see how the top end of the market behaves completely different. If you go look like in the middle of the chart, you can see how the bottom 3 quarters of the market just kind of kept slowly appreciating and everything. And then when you look at the top of the market, it was going down in 2021, which is counterintuitive because year over year, if you look at the dots, that's year over year. Year over year, if you go look at the red triangle, home prices are more. For the bottom 3 quarters of the market. But the top isn't. The top is less. So what happened is when people say, but Vegas's home prices fell year over year in Vegas, that's like saying all sorority girls are beautiful, right? Or whatever. You can't do that because you have this big drop in the highest end properties, the highest value properties, but the regular properties went up year over year. And yes, they're still they're showing that they're leveling off, but you look at how crazy volatile the prices are in the higher end homes. It affects the market. The reason we break these down is so you can see, because I know a lot of you watch this, like you have an investment house here that you paid $150,000 for 10 years ago. It's worth like 3 something or 4 something. And you don't care about Summerlin and $1 million houses. This doesn't affect you. You got a house in, Spring Valley that's, 2,000 square feet that you're trying to figure out, should I keep getting, $2,000 a month rent out of it, or should I sell it or do something else?
But, let me ask you this. What do you think the portion of the market is that is a luxury market? If you said one in how many is $1 million home in Vegas, what would you guess?
Okay. That's an important one before I go to the next slide.
Put that in the comments. I'm going to give you like a count of 5. Put that in the comments, and then we'll go on, because this is an important portion to help you understand what's happening with prices. In 5, 4, 3, 2, 1. What did you guess?
Okay, so here's the deal. Here's the thing you need to write in the comments what you think, or just think about it. Put it in your head. In 2011, the top 10% of the market, if you took the top 10% of homes, 310. Mm-hmm. Now that that 310 number is important because that was the median in 2005. So we went from 2005 median to 2011 top 10% of the market was 310. Okay, what do you think the percentage of homes in Vegas that have sold over $1 million? What percentage is it? 3%, 4%, right? Well, here we go. This is the market segments by median price. The top quarter, the median price of the top quarter, which is 25% of the market, is $1 million. 12 to 13% of the market in Vegas. And this is just Las Vegas. This doesn't include Henderson, or we're only taking Las Vegas data because we're trying to have numbers we can, because next month, if I grab Henderson or whatever, I can make the numbers do crazy things. So this is why we always compare the same numbers. It's $1 million. So 12, can you believe that? 12% of all homes in Vegas that sold it's 1 in 8 homes.
Yes. So they are a force to be reckoned with in Vegas. And that's part of the reason why the numbers in Vegas look the way they look, because this is a significant portion of the market now. So when that, as Todd showed you, the top quarter of the market is very volatile, right? This is where they have a lot of that price movement. So when so many homes have that big price movement, that influences what the numbers look like globally for the market, even though 3/4 of the market did not participate in that volatility.
The other interesting thing about this is the bottom 1/8 of the market, bottom 12% of the market is 360. And so that's pretty, 360 would have been a top, 5 or 10% house a decade ago. And now it's the bottom. The last thing on this chart, these are days on market. Okay. You can see it's 3 to 3.5 months of days on market, which means they're selling in 3 to 3.5 months, right?
Which is really fast, actually, because the normal market is 4 to 6 months.
And remember, somebody came on the blog, oh, but Redfin says 4 point whatever. Okay, let's say it's 4 point whatever. That's still less than if I took an average of the last 15 years. That's still less, right?
Right.
So the days on the market, homes are not sitting on the market forever. Okay, now, last chart.
Okay.
I promised. I thought that was the last chart, but I actually have one more chart.
Okay.
We were all told that when the first thing that changed was the number of people with price reductions, and that you would see a thing that would said 63% of people have, and then people go, oh, homes have fallen 63% in Las Vegas. No, they didn't. 63% was the number of people who just, so if you listed for 500 and you dropped it to 499, you counted as you changed your price, right? Okay. February 10th, which is the last day of the data, because it takes a couple days to aggregate the data, okay? 90-day average, or the 7-day average, which is the close-in one, was 46.51%. What that means is less than half of people dropped their price. They were able to sell, these are closed sales, without a change in list price. Oana, why would you not have to drop your list price?
Because you got your home sold. So look, if people are showing your homes if people are making offers on your home, then you don't need to change your list price, because that list price is actually good. It's getting you the traffic that you want. It's getting you offers that you want, and it's just a matter of finding the right buyer with the right offer to make a deal. But if it's crickets, if nobody's coming to visit you, then that's when you change your price, right? Because you're trying to get people in the door.
Okay, so how does this compare to 2000? So 2006, 7, 8, 9, 10, 11, 12. We were probably selling 500 to 600 houses a year, all listings.
Right.
So we were dealing with the seller and price reductions. How many, like every month we would get a price reduction?
Right.
Was it mostly common that almost every house we would have to deal with a couple months of price reductions before it sold?
Yeah, I mean, that was not uncommon, particularly homes that were not fully renovated. Would certainly need price reductions in order to incentivize buyers to make an offer. Because remember, that list price is nothing more than an invitation to make an offer. It doesn't necessarily correlate to anything else.
But wouldn't it have been great to have over half the price home sell at our recommended list price?
Oh, that would have been glorious.
Sell?
Yes, less work for everybody.
Less work for everybody. This is not that data right there. When in the summer when we saw this number screaming up, everyone ran for the hills. But now it turned the corner and it's tanking, and everyone shut up like, oh, darn it, we were wrong on that too, right? That's what they say. Oh shoot, we messed that one up. So this is good, but look at the trend; it's just tanking. So we're probably going to get down back to the 30%, which is pretty normal, right? Because some people you just can't control. I want $550 for my house. Well, the comp say it's worth $510, $520. Nope, I want $550. I would list for $550 to see if somebody accidentally pays me that, right? Yeah. You always have those.
Yeah, I was chatting with an agent on Friday, and she was telling me that her client wants 2.8 for the house, and that the house is worth 2.2. And
2.8 bananas?
Yeah, 2.8 million.
Million bananas.
Yes.
That's a lot of bananas.
And it's worth 2.2. And we had the discussion with the client, and the client said, if I don't get my number, I don't get my number. But I'm waiting for that California buyer. California buyers, as much as we make fun of them, they are well informed too, and they know what properties are worth.
Yeah, sure.
So anyway, what did you think? Did you like the charts? Did anything surprise you? I definitely liked the part where we explained what's going on in the top part of the market, because I thought that was interesting, particularly understanding how much of that top part of the market influences the rest of the market as far as when you're looking at globally what's happening in Vegas. I thought that was really interesting.
Well, no, the reason that's interesting is because the people who are just giving you general data and trying to paint all of Las Vegas as this is happening, for most of us that deal with the bottom 3/4 of the market, like it's not really, we're not seeing it. It's just like the listing we just had. We just had a listing where we sold it for list price. We never changed the list price. We just didn't panic and immediately, okay, we have to drop it now because, whatever.
Right. We ended up with like 5 or 6 offers.
5 or 6 offers over time. And so, but the data right now shows us in a exacerbated cyclical thing, because remember, we're coming off lows never seen. End of 2021, beginning of 2022, saw record low times on the market, record, low inventory, record low. So yes, inventory climbed because we went from record lows. It's not just it can't just stay there.
Right, and that wouldn't be good. We want a healthy market. A healthy market is good for buyers and sellers, and it's good for agents, because the more transactions we have, the better off we are economically. So we like it.
Yeah, we like it.
Absolutely. So if you're thinking of selling your house, reach out to us. We'll give you a hand, okay?
Yep.
So thank you for watching. Please subscribe, hit the notification bell, like the video, share the video, leave us a love note, and we'll see you on the next video. Bye.
Bye.